This video explains how we book expenses in construction. Construction takes some years to complete. Capitalize pre-acquisition costs at construction in process. Some type of expenses might be finder's fee, feasibility studies, appraisal, planning and consulting fees. Capitalize property acquisition and legal fees. Keep this separately. Capitalize building costs at construction in process. Interest and expenses associated with arranging financing. Architectural, engineering and other similar. Site preparation and demolition, grading, materials, construction contractors, and other expenses. Question is, when do we recognize expenses and revenues? We recognize expenses when we start selling, and we recognize as much expenses as to match with revenues. One method is percentage of completion. Let's illustrate with one example for a project that lasts 3 years. Suppose in year 1 you pay all municipality permits, architects, then start building and finish up to the second floor. Total cash coming out is 2 million. This will be booked as construction in process, which is part of balance sheet. In year 2 you finish building up to the 8th floor. You spend another 4 million. You sold 80% of the building for 8 million and received 40% of the cash, 3.2 million. In year 3 you finish the entire building by spending another 2 million. Sell the other 20% for 2 million and collect all cash from customers, 6.8 million. You will start booking expenses in year 2, go by square footage of the building. Cost per square foot, and revenue per square foot, to match revenues with expenses. In year 2 you recognize 8 million revenue and match with 6.4 million expense, which you bring from construction in process and land acquisition. In year 3 you match 2 million revenue with 1.6 million expenses. This illustration is for accounting purposes, not for tax purposes. Next video will explain tax calculations.